So I am a partner and head of institutions at Woodstock. This is probably the largest fund out of India that invests in this space globally. And yeah, we typically do a lot of webinars that are more focused towards family offices and ultra high net worths, more from people bringing becoming LPs into our fund, etc. However, when I was approached by Archita for this one, it felt like this is something we should do because the awareness for what we are trying to build in the digital asset space needs to start from an early age before people build a lot of biases in life. So I'm quite looking forward to this. I have tried to keep this at a very basic level, but even then it will probably get a bit technical. So please bear with me if that's the case. We have, I think, around an hour, so I will try and quickly wrap up the presentation in 25 minutes tops, and after that I'll open it up for Q&A. And look, I mean, I guess you guys will also have my email ID, so if you have any other questions, you can always reach out to me later as well. So great. So let's dive into it, and we'll take it from there. I hope you guys can see my screen that I have shared.
Yes, Prashant, we can.
Cool. Okay, thank you. So okay, let's start off with what are digital assets, right? Now, what we keep referring to as cryptocurrencies is what we internally call digital assets. It's because when you say something crypto, then unfortunately that word has been has a bit of taboo around it, and it's been maligned for no reason. So we try calling it digital assets, which is a more neutral term. Anyways, so what is a digital asset? It primarily has three qualities within it. Number one is there should be peer-to-peer transfer enabled, which means that person A, myself, should be able to transfer it directly to person B. Say that could be Hussein, and this can happen between my wallet to his wallet. So it does not need an intermediary like a bank or an institution to pass through. Second quality is the network on which all of these wallets and assets are circulating. That network should have distributed control and decision making. So there is no centralized agency that controls the power of this network, right? And we can go into a lot more detail on that, but basically imagine it as 100 different people who are running nodes for a network on their computers. And these 100 nodes or computers is what is controlling the distribution and decision making across this network. The third aspect is that all of this happens with an underlying technology that we call as blockchain. Now, this word again has been very widely used, but yeah, this is what forms the basic layer of digital assets. Now, when all three qualities are met, it is what gives rise to something what we call as digital asset, or more commonly referred to as cryptocurrency. Now, why these assets came to being is that for multiple advantages, right? Number one is this entire network and the technology is secured by what we call cryptography, which is not a new feature, which has been there for multiple decades, but it has found a very good use case with blockchain. Number two is that it is convenient, which means, as I mentioned, a peer-to-peer transfer can be enabled. So I took an example of myself and Hussein, but I could very well do that same transfer to someone in a remote corner of Africa if he has the right wallet and just is connected to the internet. It's like a WhatsApp chat. And number three is that it's portable. So I can hold custody of these assets myself in like a USB stick, and I can carry it anywhere I want. So I'm in complete control, and you can carry billions of dollars in just a very small stick because it's all digital. Yeah, so why were these things created, right? I mean, it sounds very fancy, but why were these created? So these were created originally as something that could go against and coexist along with our traditional fiat currencies, which is our dollars and rupees, etc. Now, our typical fiat currencies are something that is issued by a government or a central bank. The supply of these traditional currencies can be unlimited because it is dictated by the central bank as needed. And you must have seen that a lot of money printing has happened in the last few years post-COVID. And this is entirely centralized, so issued and controlled by banks, and a significant majority of the population may in fact have be at a disadvantage with all the money printing, right, in the long term. But they don't have a say in how this progresses. And the value of these currencies are determined by the market and regulation, which is just another way of saying supply and demand again. So when you come to digital assets, now it's just trying to create a new paradigm. where these currencies are created not by an agency or an institution or a centralized authority, but by a network, right? And this network is connected across multiple computers, and there are certain puzzles or certain consensus mechanisms that need to be followed for these new currencies to be minted on these networks. And when a new currency is minted, which forms part of the digital medium, it follows certain rules prescribed by an algorithm or a code, which is again controlled by a significant majority of the network. So no one single person can step up and increase the rate of supply or decrease the rate of supply of these assets, and which is where it is remarkably different from our traditional currencies. The value in this, which has been accruing a lot over the last decade, is determined purely by supply and demand. And as more people believe in a digital asset ecosystem and start adopting it, the more the value accrues in that particular currency. It's as simple as that. Bitcoin was the first such asset that was created way back in 2009. And what I just outlined as digital assets going up against traditional currencies was the concept of Bitcoin, which proposed to be a peer-to-peer transfer of value without centralized intermediaries. Yeah, how is it generated? I'll not go into too much detail in this because it gets a bit too technical. But as I was mentioning, you have a network of say nodes, which in this case are called miners. Okay, like how if you have to extract gold, then you have various different mines across the world, and the miner that hits the right pot of gold is kind of extracting the new block of gold into this world, right? So it's a very similar parallel in this, just that this mining happens on computers. And typically what happens is in case of Bitcoin, every 10 minutes a new block is created. This block effectively has all the transactions of the previous 10 minutes that have happened across the world, and it just gets accumulated into this block. And miners across the world have to solve a particular cryptographic puzzle to get the right to add this block to the blockchain. And whichever miner is successful in adding the block gets the new Bitcoins as a reward, right? So it's basically a similar process to mining, and your reward is Bitcoin in the process. And that's how new supply of Bitcoin comes into the system. This is only how Bitcoin works. This is also typically how Ethereum works. But over time, this process has also evolved, and you have various different ways of minting new currencies. Like, I don't know how familiar people are, but if you look at Solana, if you look at any other cryptocurrency, they have very different mechanisms of how new blocks are created and how new tokens are created in the process. But as an underlying, all of this runs on blockchain, and all of this is dictated by a decentralized node of computers. So again, if you come to, this is just an illustration of how Bitcoin disintermediates banks. So where today, if you have to transfer money to some other person or a business, then you have your bank at your end, and then you have an intermediary payment gateway like a Visa or a PayPal, and then you have the bank at their end, and then it goes to them, right? So you have three different layers. Now, if you have to transfer, say, Bitcoin to someone else, or for that matter, any other cryptocurrency or digital asset as well, all you need is you just connect to the network, and then you transfer it from your wallet to their wallet. And a particular validation of this transaction happens through the network, and it just gets received on the other end, right? So it's just a pure example of disintermediating a lot of centralized entities. So technically, it is faster, it is global, and it's peer-to-peer. Cheaper or not at this point, it is definitely cheaper for larger volumes, but for smaller volumes, it is probably still a bit expensive. And you're having, and there is a lot of development happening there as well to make this a lot more accessible for smaller transactions as well. So yeah, so that was mostly about Bitcoin and, say, to an extent, Ethereum. Now, this is how this space has evolved. In 2009, Bitcoin was created. In 2000, so Bitcoin was basically solving for decentralization and a secure network, but it was very difficult to build on top of Bitcoin. However, then Ethereum came up in 2015. Ethereum was a lot more open source and a lot more easier to build upon because it introduced a concept called smart contracts. And a lot of activity has since happened on Ethereum. And think of Ethereum as like your Android app store. So a lot of apps get built on the app store. Similarly, a lot of apps get built on the Ethereum network as well, right? And where your app store is effectively Google's centralized engine, or your app store on iPhone is an Apple centralized engine. Here the engine underneath is a decentralized network called Ethereum. So because a lot of these contracts could be created very easily on top of Ethereum, it resulted in something called an ICO mania in 2017-18, where a lot of companies, a lot of people, a lot of entities started issuing worthless contracts on top of Ethereum, and were just trying to raise money on the back of products that were not yet built, right? And that took the market to a very la la land, and then it crashed back post this mania, and which was not ideal for the space. But you have to take a step back and realize that this is open source, and it is unregulated, so people have a lot of flexibility in what they can do. But what it also did was it brought a lot of eyeballs and a lot of very good developers into this space, and the activity in the space has since just increased manifold. So we got into 2020, where decentralized finance became a craze, and 2021 is where NFTs, which I'm sure a lot of you must have heard about, is now the buzz thing. And then where is this world exactly going towards, right? So it is going towards a new web architecture or infrastructure, where our entire internet as we know today is getting transformed into a much more decentralized version, where the control of the network is more with the people and the communities rather than with centralized institutes. And if you guys have seen the movie Ready Player One, then that feels like a fantasy movie, but this space is more and more approaching Ready Player One as a reality. I mean, even if you haven't seen that movie, it's a Steven Spielberg masterclass. So I mean, that is something that everyone should see. And that is very easy for you to then picturize like what is happening in this space. You have a virtual world where virtual currencies exist. People create their virtual avatars, and you're living a digital life of your physical self. And that is becoming more and more a reality ever since COVID started. So you had economics, technology, and finance in all the previous iterations of finance in the past. Now we have community as well, which is where the decentralized and distributed decision making comes from. So where are we headed with digital assets in the future, right? If you have to go a step deeper, then this is effectively what we are looking at. So anything that we access on the internet today, for all the kids and students out there, if you're accessing any application like an Uber or an Amazon or a Candy Crush, or I mean whatever the kids play today, I don't know. Then then it has two underlying features that are dominant. At the base, you have something called TCP/IP, which is where which is a protocol, which is through which data is sent, received, and transmitted in packets, right? And on top of it, you have HTTPS, which makes sense of this data from source to destination. And then what we see as as users is in the applications on the front end. Now, this is what we call Web 2.0, and a lot of value or economic interest in this space was entirely concentrated in the application layer at the top. So which is where you see your Facebooks, your Googles, your Ubers, Amazons accruing a lot of value for themselves and their shareholders, right? So everything underneath was just a layer for communication, not for value transfer. So this is being completely flipped in the Web 3.0 space, where from the underlying, the protocol, instead of TCP/IP, you can draw an equivalent and say Ethereum, for instance, is a protocol which not only allows for communication travel, but also value travel, because it has its own currency. And on top of it, you have various services like price feeds, like data indexing, similar to Google Analytics. Even all of these allow for making more sense of the data that's transmitting through the protocols, but you can access value in this by participating in the digital asset ecosystem like you do with stocks. And then you come to the application layer. So as the protocol and services layer in this space becomes bigger and bigger, which is still getting built, in my opinion, then the applications of tomorrow over the next decade is what you and I will see on our phones. And we will most likely start seeing a decentralized Facebook, a decentralized Google, etc. What does decentralization mean in that case, right? So what it simply means is As a user in that particular network, you as a user will profit every time your data is used by the particular company. So where today Facebook and Google have a lot of value by using your data, but you don't really get value for the data, and you don't really have a say on what data of yours can or cannot be used. The networks of tomorrow, the applications built on top, you will have a lot more say in it. And because you will be able to access those applications and the underlying layers through digital assets, every time if that particular application takes off the way Google did today, then you as a user, as an early user, will stand to benefit, not just in terms of entertainment, but also in terms of monetary appreciation. So that's I would say that's how this entire space is getting flipped. So this, I will not take you through this. This is just to show you how much activity is happening under the hood, how many different protocols are getting built, how many different services layers are getting built, what type of applications are getting built in the decentralized finance space, in the NFT space. It's a highly competitive space, and a lot of activity is happening, and no one can sit on their laurels, because unlike how we hide our working in an exam that we do without showing it to anyone else, this is entirely open source. So whatever is built on Ethereum, you and I, if we understand code, we can just go, we can look at it, we can poke holes in it. If we think we can improve upon it, we can quickly set up a team and do that as well, right? So which is why the growth in this or growth of development in this space is happening at warp speed. Yeah, this is again a quick example of how a parallel economy is getting built. So as I said, Ready Player One, right? So again, I go back to that. So think of everything we have in the traditional world today, and think of its digital representation. So where our RBI or the Fed Reserve creates money today, you have Ethereum in the digital world that is creating money of its own. And Ethereum is not just the only blockchain. There are multiple blockchains. They're all creating their own digital assets. Now, what will survive or not in a couple of decades, no one knows, but they're all accruing value as of today. JP Morgan is our bank here, for example, where or Citibank or ICICI, which is what brings users for this money supply. So you have a lot of solutions getting built on top of protocols as well, which are cheaper, which are faster. And this is what brings a lot more users onto those platforms as well. Similarly, if you go to services, I mean, the entire web browser experience is shifting from Chrome to Brave, where you can control what ads you watch and you can get paid for any ads that you want to watch, etc. Bloomberg, which I used to use a lot at Morgan Stanley in the past, that is kind of transforming into something like a band protocol or a chain link in this space, which brings price feeds from multiple sources as opposed to a centralized point. NFTs, if you have looked at art galleries in the past, which is all about physical art, then you have online marketplaces for digital art as well, where again, you can mint art, you can create art, you can buy or sell art, and a lot of this art is getting very expensive, because ownership and authenticity of this art can be proven beyond doubt, because all of it is captured on the blockchain. And then Pokemon, I'm sure a lot of kids here must have played Pokemon in the past. I mean, just imagine like crossing all those hurdles that you have done, spent hours in the past. If you do it on an Axie Infinity as a game, then you also earn rewards in the process that you can convert into rupees in future, right? So now it's not just a play to win, it's a play to earn, right? And that is kind of a paradigm shift as well. And yeah, I mean, in the financial space where I come from, you have exchanges which are also getting disrupted in a decentralized manner, but that's okay. That I won't go into too much detail on here. Yeah, so this is like homework for everyone who is on here. Okay. All of this, what I mentioned, what we spoke about, sounds very fancy, maybe sounds too good to be true as well, but it's all happening, right? The best way for any of you guys to experience this is to try it out for yourself. And the user experience will not be as easy as just opening up a WhatsApp and starting to chat. It needs a bit of a learning curve, but it is definitely worth the effort. So you can go on to you can install a Brave browser from your app store. You can install MetaMask as a non-custodial wallet. You can go on to Uniswap. You can start buying some of these tokens. You can then go on to an OpenSea. You can buy digital art. You can take that and you can go to a Decentraland, which is like a virtual real estate place. You can travel the metaverse over there. The options are unlimited, right? So the best way you can build conviction in this space or understand this at a deeper level is by just trying out yourself. It's a virtual land, it's virtual assets, but the value is very real. Oh, but in the first place, for you to get to buy your first Ethereum, you need to go through a centralized exchange like, a Coinbase or a WazirX or a CoinDCX or one of those. So once you have bought your first digital asset, then you can keep traveling in the digital world. So yeah, so this is all very fancy, but are people really using this today? The answer is like an emphatic yes over there. So the growth in users in digital assets is mirroring very closely the number of people that used to use internet way back in the day. I'm sure a lot of people were not even born in that timeline. But anyways, keeping that aside, the growth is very similar. So what that means is even though it started off at a small base, the growth is gradual and increasing, and it is appealing a lot to the younger generation of the world. And as of July 2021, that 70 million number you see on the right, there are around that has gone up to around 200 million people who have at some point accessed digital asset in the world. Again, these are some metrics again to show how much growth is happening on lending platforms, on exchanges, on art galleries in the digital world, and how much value is being accrued by a lot of these platforms in the digital space. Oh, came again. Yeah, and even right now, we are at a very small base of where we are in terms of this entire ecosystem. So digital assets as an overall space is only 2 trillion big. Every other asset class in the world is many fold higher than that. Okay, and that is again interesting to know, because everyone who sits outside thinking we have missed the bus, it's too late to enter, maybe this will all come down. No, it's just the very beginning. Yeah, again, I had this slide, but maybe it's a bit too don't look at it. I'll just cover it very quickly. So what has happened since COVID is that capital or money has been flowing from the physical world into the virtual world, right? So just imagine this way, that you had 100 rupees to buy something in the past. Because of all the central bank actions of increasing a lot of money supply in the world, that 100 has become 300, not because someone earned more money, but just because a lot of money was entered into the system. So what the same asset which was worth 100 is being chased by a lot more money now. So that will just devalue the money that you have yourself. And it will give rise to something called inflation, which is again, increase in value of assets because more money is chasing it. So when you come to digital assets, no one can just by default increase the supply of these digital assets for any protocol. So it helps preserve a lot of wealth, because if you are comparing an asset which has fixed supply against an asset like the rupee or the dollar which has inflating supply, then the fixed supply is always relatively more valuable. And that's just because relative to the other asset, it's just not getting inflated. So it helps preserve wealth, right? And also, because we are starting at a very low base, this is being seen as a space where people can build more wealth as well. And keeping the wealth part aside, which is irrelevant if more users are not participating here, a lot of acceptance has come for digital assets and digital media, because most of us have been in lockdown states for a good period of the last 2 years, and that has been the phenomenon across the world. And even in our space, right, we can see that a lot of e-commerce companies like Amazon, or social networks like Facebook, or even food delivery systems like Swiggy and Zomato have all accrued a lot of value, and all of that is digital touch points, right? So which is very similar to what we are doing here. In future, you may just be able to put on a virtual reality headset, and you may just get lost in the virtual world for hours together without having to leave your home, and that becomes a massive source of entertainment. So so all of these reasons together are combining to why there is more adoption and capital moving into the virtual world. Yeah, so I mean, I painted a very healthy and no downside kind of a picture, but therefore I think I should also capture some weaknesses and threats in this space. So weaknesses, if we look at them, is I already mentioned user experience is not the easiest over here, mostly because a lot of coders or developers are the people who ended up building everything that we see today. So as more business minded people, product minded people come into this space and build work on the user experience, I'm sure that will improve. The space is unregulated. What I mean by that is if you have, say, 1 lakh rupees in your bank account, if the bank goes under, then a central bank will insures you for your money, right? So because there are certain regulations surrounding your currency, your stocks, and your bonds, etc. But this space is fairly unregulated. Okay, it's not because the space wants to stay unregulated. It's just because all of this is very new, and for the regulators and for the governments, it's very difficult to get their head around what is going on. So I think the entire world is moving towards a regulated state for digital assets as well. But until it happens, people just have to be careful about nefarious actors and people who are just out there to scam other people. So yeah, manipulation is also an extension of that. And first and foremost, I would say don't believe everything you read in the media about digital assets, because unfortunately it's all one-sided picture. And you need to really kind of try out this stuff, be in the right circles, understand what's happening at this core. So in a decade from now, you don't sit there realizing, oh my God, a lot of action has happened. I just went by what the news said, and the news painted a very unfavorable picture of this space, right? So just be careful of that. Threats wise, yes, regulatory risk is always looming on this space from various regulators globally. Now, I have a lot of sympathy for regulators. They do want to, protect the investors who are coming into this space, a lot of whom may just be getting carried away by the price action and may lose a lot of their hard-earned money. So that part of it needs to be protected. Where they need to, in my opinion, stay cool off a bit is in appreciating the technology and trying to work with this digital asset space in building the right frameworks. So I think that is where this space will progress as well. There are a lot of security hacks, in the sense, if you store your assets on exchanges, centralized exchanges, for instance, a lot of these exchanges do get hacked from time to time, and you may end up losing your assets. It is not it is not a shortcoming of the technology. It is inefficient risk management by these exchanges. So they did not know how to store these coins, or they just left their systems open for hackers to attack. So that is poor understanding of technology. And the third part is lack of sustained adoption. And third threat, which what I mean by that is, what if tomorrow no one wants to participate in this space? All of it, all the demand goes away. And as I said at the very beginning, this space thrives on supply and demand. And if demand goes away, then so does this space, right? Again, that threat, I think, was there 5 years ago, but as you can see how the progress has been in terms of people adopting this space. So I think that threat is also lesser and lesser. But you need to be aware of these weaknesses and threats to form a balanced view as well. Yeah, so how to participate in digital assets? I mean, I can, wax lyricals entire day, entire week, but the best way for you to participate here and understand this in detail is to try it out for yourself. And the younger you guys are and you try this, the more I'm sure you will appreciate it and what it is trying to do. And so even if you have some skepticism, some cynicism, that is all very healthy. But what is most important is to form a balanced view and form an opinion for yourself. Forming an opinion for yourself is not just about digital assets, it's about life in general. But that should also extend by default to digital assets as well, because a lot of views out there are based on prejudice and bias, and you should not let that affect your judgment. So yeah, I mean, if you are particularly focused on investing, for instance, then you can always access a lot of these digital assets on publicly traded exchanges like WazirX, CoinDCX, Binance, Coinbase, etc. But what we do as a fund just is we are a venture capital fund. We have a very strong thesis of how we see this space progressing over the next decade. And on the back of that thesis, we just go and identify a lot of companies that are building at a very early stage in this space, right? So they may not even have a digital asset out, but they have a great idea of how they see this space progressing. And if that fits in with our own narrative, then we would be very much investing in them. It's a very typical venture capital approach from that standpoint. So for example, if say the next Ethereum is coming out and we see a lot of promise in the technology and in the founder and in the team, then we will take a position in it at a very early stage. And this may be a lot earlier than when such a token may even come to an exchange, right? So because we are very much under the hood in this, we follow it a lot, and then we are able to do that. So I just breathe this 24/7. Volatility, which is yeah, hang on, let me just quickly check on the time. Okay, I think I only have only 2 minutes anyways. So volatility, right? So a lot of talk has come in terms of the space being extremely volatile, there being a lot of ups and downs in values. Now, there are two ways to look at it, right? One is that this is a very nascent space, and it is in a particular territory right now, which we call as value discovery. So when value discovery for any asset class happens, there is a lot of volatility that emerges in the process. Now, even the more traditional investors are thrive in volatility. In fact, volatility is something that is extremely appreciated on Wall Street, for example. Anyways, keeping that aside, it is just a feature of a nascent asset class with relatively lower adoption. And as the adoption increases, and say if it goes tenfold from here, then automatically the volatility will also get lower. Okay, and at that point, of course, the alpha that is well, returns generated in this space will be lower as more people have entered, but automatically the volatility should also reduce, as we have seen with every other asset class in history. But if you are a patient long-term believer in this space and you hold something for a long term, of course there can be a lot of scams as well. I'm not saying everything will follow this trajectory, but if you're able to identify the right project solving the right problems with the right utility, then a patient holder who does not concern about volatility, if you zoom out the picture and look at it, then it's invariably a steady upward growth, right? And that's how we typically look at it. Yeah, regulations, I think we have covered, so I won't spend too much time on this. My only point here will be that it's unregulated, but it's not illegal. And we have a very strong view that regulation is the only way out of this, because you cannot ban something that you don't control. So even when China tried banning Bitcoin mining, for instance, all of that mining just resurfaced back in the US and Eastern Europe. So the only way a ban can work is if all the 190 plus countries in the world come together and ban. And in the history of humanity, all the countries have never ever agreed on something together. Okay, so I don't see that happening here either. It's as likely as the roof on top of my head collapsing. It is a non-zero probability, but will it happen, right? I'm happy to live with that risk. So that's how I look at this. And there is a lot of progressive work happening on the regulatory front as well across a lot of regulators. So yeah, I think that's where it'll go. So that's it. Hopefully I did not put a lot of people to sleep, and hopefully you guys learned something out of it. I think we have some time and we'll see how it goes, but happy to take any questions. And if you found this interesting, then give it a try yourself. And if you have any questions, just hit me up on Twitter, LinkedIn, or just email me as well. No worries.
Thank you so much, sir. That this session was very interesting. But we can take 2 or 3 questions. Kindly push your questions down in the Q&A box.
So someone's already asked, so how does MPL app work in way of earning money? I don't follow that question, to be honest. I don't know what an MPL app is. Multiplayer, is that what it is? Multiplayer, is it like a new age lingo? Sorry, I'm not familiar with it. Oh, is CoinSwitch a reliable app to invest in cryptocurrency? Yeah, again, so maybe I should have mentioned this at the beginning. Please don't take anything I say here as investment advice. Okay, that is not what I was here to do. This was just an education session. CoinSwitch Kuber is comes across as a very reliable app. It has a lot of formidable investors backing it, and we actually know the team as well. But again, do your own research and accordingly go across. But yeah, in my honest opinion, it is a very reliable app. Could you explain the browser Brave rewards work? Yeah, so what Brave does is it allows you to decide what ads you want to watch, whether you want your data to be shared of what you're working on within that browser. Right now you can fit certain settings such that when you if you give access for watching certain ads, then there are certain ads that are pushed by the network itself through the Brave browser. If you watch those, then you start accruing a token called the basic attention token, which is BAT. And this, I mean, it's not like you watch one ad and you get, you know, $1,000 worth of this token. But you do keep accruing rewards as you watch more and more ads. And these ads, basically, I think it's also listed on something like a CoinSwitch or a WazirX. You can always withdraw it from the network. You can take it to one of these exchanges and you can convert it into another digital asset, or maybe even into the rupee as well. What is the difference between Web 2.0 and 3.0? Yeah, see, at a fundamental level, the difference is that Web 2.0, as I mentioned, had a lot of the entire network on which it was built facilitated travel of communication within it, but not value. And the value, therefore, was accrued at only the application layer, which is being monetized mostly by using our data, right? So in Web 3.0, a lot of value accrues even at the protocol, at the fundamental level that you and I don't usually look at. And more importantly, the applications that will get built on Web 3.0 will allow the users to also monetize their usage of that network and decide whether or not they want their their own data to be used across that network. Every time a new Bitcoin is mined, does the old Bitcoin be given to the miner? What is old Bitcoin? See, there is look, every time a new Bitcoin is, the old Bitcoin or any Bitcoin at any point which gets mined comes to the miner who has successfully added the block to the blockchain. Okay, so right now it's 6.25 Bitcoins that get rewarded every 10 minutes to the successful miner. Now, yeah, anything from the next block onwards implies that the previous blocks are all old Bitcoins and they are with the miner who processed them. Now the miner can decide whether they want to keep the Bitcoin with themselves or they want to sell it to other exchanges or other marketplaces, etc. That's completely their decision. So a lot of exchanges, a lot of over-the-counter shops, they have relationships with miners, such that even miners, for miners, it's like, I have mined gold now. What do I do with this gold? I can't just keep stacking up the gold with myself. I may want to sell some of it to pay for my own fixed expenses, my employee costs, and etc. So that's what these miners do as well. So they take it and sell it off, or they can also build some position with it. I heard of a developing cryptocurrency called Pi. Can you give further details on what it is? Yeah, so yeah, again, I have not very extensively followed Pi. So Pi is allows is a mobile first blockchain, right? So I can access Pi as a network by just installing the app on my phone. And what I can do in the process is I can keep mining new Pi coins on my phone just by participating in the network. So it's just it's just beautifully decentralized, the entire mining concept, and more users that are on the platform, which is very simply just by accessing the app, the more secure the network is. So they've not launched this in my knowledge. They have not launched this token yet for people to buy and sell, but it's a very interesting concept. We just need to see. See, again, in cryptocurrency, it's easy to mint and distribute these tokens or coins, right? What is important is what utility does it generate in the long term. Okay, so I can just set up another Bitcoin code and I can start minting 6.25 Bitcoins every 10 minutes as well. But what does it mean? Whoever holds it, right? Which is why a lot of these tokens will have no value in future if they don't have a utility. Bitcoin is generating a utility of being a store of value because it is the most decentralized and secure network. And it is something a lot of people and institutions believe is replacing gold as an inflation hedge in the future. So so Pi also has to define its own utility in future as to why people should hold it and not just dump it on an exchange. And that is that is the crux of any digital asset. Does Bitcoin have funding in stock market? No. So stock markets are all highly regulated. Okay, stock markets allow you to trade your company equities in stock format or fixed income bond products, etc. Bitcoins trade on exchanges that are not regulated in the same way. Okay, for two reasons. Number one, it's highly there is no regulation, so there is no point of setting up a regulated exchange for Bitcoin. And second reason is most of the startups in this space look at it as an opportunity, right, to kind of scale their business a lot faster as well. Having said that, there are instruments like ETFs or like mutual funds equivalent that are getting set up externally in various countries, and this will allow people to access Bitcoin and some other cryptocurrencies in future in on some of these stock exchanges as well. But these exchanges also then have to build the infrastructure to be able to connect to the Bitcoin network, the Ethereum network, and have the right custody process to store these assets as well. So that is a learning curve for them, but yeah, we foresee that happening over the next couple of decades. Is Web3 more open source than Web 2.0? Yes, definitely. Yeah. See, Web 2 also is also, a lot of it is open source. I mean, Android, for example, is open source. It's just that the value accrual does not happen to people mostly, or the users of the network. It just happens to Google in this case, primarily. Someone had raised a hand in between. I don't know if that
yes,
meant anything.
So I think Ved, you have raised your hand. You can just put a question either in the chat or in the Q&A. You'll see those options at the bottom of your screen. So Prashant, we were, I think Bitcoin and, anyone who follows Elon Musk, gets this idea because, he obviously really popularized, Dogecoin, etc. Do you also see in the near future where people can actually go into, take these digital assets and actually buy physical assets, like, buying a vehicle, etc. Do you think that is something which will happen in the near short term, or that's still some time away?
Yeah, it could happen. So Tesla did launch it, and then they went back on it a bit on ESG concerns, and then they said they will launch it again. PayPal has integrated a lot of these currencies on their networks for users to pay with, and also for some of their suppliers to accept it as currencies as well. We think a lot of it will happen going forward. And we see this entire digital asset space merging more and more with the traditional space. See, also, as a lot of people would have probably done it a lot faster if the regulations were in place. Because there are no regulations, then a lot of these institutes have a lot to lose by integrating cryptocurrencies onto their platforms. But yeah, I think it's a one-way street. I think a lot more people will start integrating it. And also, with respect to Elon Musk, I think again that is one person's word, right? Now, he's a great person to follow. He's done a lot of good work, but it's also very important again to develop your own conviction and understand this space at a more fundamental level. If tomorrow Elon decides that he's had enough fun with Dogecoin and he wants to move to something else, then a lot of people who may have entered into Dogecoin may start cursing him. Or I'm not saying he will do it, but what if, right? So it's better to have your own view and opinion. Which is more advantageous, Bitcoin or cryptocurrency, and how can you invest in them? So look, invest in them is very simple. You can go on any exchange and invest in them. If it is, if you want to access more on the private side, then it's more at a fund level like ours, right? And I mean, of course, a lot of people have invested in our fund as well, but ours is more of big ticket size kind of a fund where we accept more of high net worths and etc. But which is more advantageous, Bitcoin or other cryptocurrency? I think that is see, right now Bitcoin has the best narrative in the market because it has been it is like the gold standard of this space, right? It is the one that has existed for the longest time. It is the most decentralized. It is also the most secure network. And it is something that institutions are also looking at to get some exposure into. Now, having said that, if you have to look at, but Bitcoin is very difficult to build on top of. Okay, so a lot of other cryptocurrencies have come up on top of which a lot of build is happening. So Ethereum, if you take, there are thousands of applications that have gotten built on top of Ethereum. And to access any of those applications, you need to have some exposure to Ether, which is the native currency of the Ethereum blockchain. So, so what I'm trying to say here is a lot of these cryptocurrencies have started developing their own narratives, and it's very difficult to say which one is better and which one is not. It's all about what type of exposure do you want. Do you want something that has a narrative of a store of value, which is more of an inflation hedge, then that's Bitcoin. If you want more exposure to something that could potentially turn out to be the new internet, like the new Android, then that is like Ethereum, right? If you want a more scalable version of Ethereum, then probably that's a Solana or a Cardano or an Avalanche. Now, this is just skimming the surface, right? Or the protocol layer. Now, on top of it, again, you have a lot of services layer. You can access, like a Google Analytics is getting built in this space through something like a Graph or a Covalent. And do you believe that data indexing platforms such as that will hold a lot of value in the future? If you believe so, then that is something that you can take a position in. Or there is Bloomberg kind of equivalent as well. So a lot of narratives are getting built, and the beauty here is you cannot take a position in Bloomberg ever, because it's a private company owned by Michael Bloomberg, and I don't think it's even listed, right? Even otherwise, even if it were listed, by the time you took a position in it, it is worth already like tens of billions. In this space, if you identify the Bloomberg of tomorrow, then you can access that asset on a lot of these exchanges, and you can take positions in it if you think that this can replace Bloomberg tomorrow in a Web 3.0 world, right? And you would have had a share of Bloomberg before this thing becomes a Bloomberg 10 years from now. That's probably how to look at it. Any good networks to invest in? Yeah, I think I'm networks. I think you mean protocol level at the fundamental layers. Yeah, I mean, there are a lot, right? Again, no investment advice, but Bitcoin is a network, Ethereum is a network. You have Solana, you have Avalanche, you have Elrond, which is one of our investments as well. And then you have Algorand. There are multiple networks to invest in. Now, which one do you believe will kind of have a lot more adoption going forward is a subjective question at that point, right? And but a lot of good work is happening on a lot of these networks. In case of discrepancy or rates going up and down, do we have any phase to approach, or how do you go about it? Oh, I don't follow that. In case of any in case of rates going up and down, do we have any phase to approach? Sorry, I don't follow that question. Is the question about prices going up and down? If you could just re-enter that question, that would be helpful.
I think that will be the last question. I think, Prashant, this is such a topic. I think questions can keep coming in all day long. Yeah.
Yeah, no, I can imagine. We do this. I think I mentioned to Archita, we do this like every other Saturday for family offices, etc. We always get a lot of very interesting questions. Can we trade Bitcoin? Yeah, of course you can trade Bitcoin on so many different exchanges, right? Just you can hit on Google, where can I buy Bitcoin in India, for instance, and you'll get a lot of options. But just make sure you go after some of the more reputed names. Just don't try to buy it off someone on the street. That's never a good idea.
Great. Thank you so much, Prashant, for making time from your busy schedule and, joining us, this morning. It was really informative, I think, for all of us. We've also had some teachers, some of our parents also joined us. We've also streamed this live on YouTube. So I'm sure across the entire community, it's really helped in terms of, just, making people more aware of, like Web 2.0 and 3.0. I saw some questions also, which were very interesting on that. So thank you once again.
Cool. Thanks a lot, guys.
Prashant.
Thanks, Archita.
We know you're in Dubai, but you've been able to, squeeze in time and do this for our kids. I greatly appreciate it. Thank you, Mr. Prashant.
No worries. And thanks a lot for everyone who dialed in today. And hopefully you learned something good. And all the best.
Thank you. Thank you so much.
Cool. Thanks, guys.
So on behalf of the entire MBIS community, I, Jason Lewis, would like to thank you for sparing your valuable time and speaking to all of us. It was truly an enlightening experience. Thank you, sir.
Cool. Thanks a lot, Jason. Thank you. Take care.
Yeah, Jason, you can also leave. Students, you can also all leave and start your next classes also now will be beginning shortly. So you can begin. We can end this meeting now.